Ever found yourself in a tight spot, needing a quick loan to cover an unexpected bill or seize a sudden opportunity? You're not alone. Millions of people around the world face similar financial hurdles every day. And that's where mobile lending apps like Branch come in. But have you ever stopped to wonder just how far their reach extends? Which countries are actually served by these digital lenders? That's exactly what we're diving into today, exploring the global footprint of Branch Loan app. Before we get into the specifics, let's briefly touch on the rise of mobile lending. Traditionally, accessing loans meant navigating complex paperwork, long queues at banks, and often stringent eligibility requirements. This system often excluded a large portion of the population, particularly in developing economies, who lacked formal credit histories or access to traditional banking services. The advent of smartphones and mobile internet revolutionized this landscape. Mobile lending apps emerged, leveraging data analytics and alternative credit scoring methods to assess borrowers' creditworthiness. This allowed them to offer small, short-term loans quickly and conveniently, directly to users' mobile wallets. This accessibility has been particularly transformative in emerging markets, where smartphone penetration is high, but access to traditional banking remains limited. Branch is one such player that has capitalized on this trend. Founded in 2015, Branch aims to provide financial access to underserved populations through its mobile lending platform. They offer a range of financial services, including instant loans, and in some markets, other services like savings accounts. Their focus has been on emerging markets in Africa and Asia, where they have seen significant adoption. So, let's get down to the core question. Where exactly does Branch operate? Branch's primary markets are in Africa and Asia. Specifically, they have a significant presence in the following countries. Kenya. Kenya was one of Branch's earliest markets and has become a key hub for their operations. The country's high mobile penetration and adoption of mobile money services like M-Pesa created a fertile ground for mobile lending. Branch has established a strong foothold in Kenya, offering loans and other financial products to a large customer base. Tanzania. Similar to Kenya, Tanzania has also seen considerable uptake of mobile financial services. Branch has successfully expanded its operations into Tanzania, providing access to credit for many Tanzanians who previously lacked formal financial inclusion. Nigeria, with its large population and growing economy, represents a significant market for mobile lenders. Branch has established a presence in Nigeria, offering its services to a substantial customer base in this West African nation. However, the regulatory landscape in Nigeria has presented some challenges for digital lenders, which is a factor to keep in mind. India. Branch has also ventured into the Asian market, with India being a key focus. India's vast population and increasing smartphone usage make it an attractive market for mobile financial services. Branch faces competition from other established players in the Indian fintech space, but they are actively working to expand their reach in this market. Indonesia. Branch has also expanded into Southeast Asia, with operations in Indonesia. Indonesia's large and young population, coupled with increasing internet and smartphone penetration, presents a substantial opportunity for digital financial services. It's important to note a few things. First, the specific products and services offered by Branch may vary slightly from country to country, depending on local regulations and market conditions. For example, they might offer different loan amounts, interest rates, or repayment terms based on the specific market they are operating in. Second, the mobile lending landscape is dynamic. New players are constantly emerging, and existing players may expand into new markets or adjust their strategies. Therefore, the information we've provided is based on the current situation, and it's always a good idea to check Branch's official website or app for the most up-to-date information on their operational countries. Third, while Branch has focused primarily on Africa and Asia, other mobile lending apps operate in different regions around the world. For instance, there are numerous mobile lending platforms in Latin America, Southeast Asia, and even in more developed economies. These apps cater to different segments of the market, offering various types of loans and financial services. Now, you might be asking, what are some of the key factors that have contributed to Branch's success in these markets? One crucial factor is the use of alternative credit scoring. Unlike traditional banks that rely heavily on credit histories, Branch uses data from users' smartphones, such as call logs, SMS messages, and mobile money transactions, to assess their creditworthiness. This approach allows them to extend credit to individuals who may not have a formal credit history but have a demonstrable track record of responsible mobile usage. Another important factor is the speed and convenience of the loan application process. Users can apply for a loan directly from their smartphones in a matter of minutes, and if approved, the funds are typically dispersed to their mobile wallets almost instantly. This speed and convenience are particularly appealing in situations where people need access to funds quickly. Furthermore, Branch has focused on building a user-friendly mobile app that is easy to navigate and understand. This is crucial for reaching a broad audience, including those who may not be highly tech-savvy. However, the mobile lending industry also faces some challenges. One significant challenge is the issue of responsible lending. It's crucial for mobile lenders to ensure that they are lending responsibly and not contributing to over-indebtedness among their users. This involves implementing measures such as affordability checks, clear communication of loan terms, and responsible debt collection practices. Another challenge is the regulatory landscape, which can vary significantly from country to country. Mobile lenders need to navigate different regulatory requirements and ensure that they are operating in compliance with local laws. This can be complex, especially when operating in multiple markets. Despite these challenges, mobile lending has played a significant role in expanding financial inclusion, particularly in emerging markets. By providing access to credit to underserved populations, mobile lenders like Branch are helping to empower individuals and small businesses, contributing to economic growth and development. So, to summarize, Branch primarily operates in Kenya, Tanzania, Nigeria, India, and Indonesia. These markets represent a significant opportunity for mobile lending due to high mobile penetration, increasing smartphone usage, and limited access to traditional banking services. With that said, thanks for watching, and until next time.